Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is March the 12th, 2019. You may be asking, where have you been? Well, this is the first Swing Trading Today I've done since January. I had mentioned at the beginning of the year that we were rebuilding the website. It has since been replaced. It's really a big upgrade from what we had, but it took a lot of work. I have European developers. And the time that it took me to produce Swing Trading Today, I was on conference call after conference call using Skype with Europe and just simply running tests. So I've been dying to get back to doing Swing Trading Today. I am back. You'll start seeing these videos more frequently. Check out the website. I'll put a link above. Give it a tour. There are still some minor fine-tunings that need to be completed, but for the most part, functionality, at least on the members end, is completed. On the front end, where you opt in for emails and whatnot, if you opt in, the email will be taken, but the autoresponder may not work immediately, but that'll be up and running. So if you opt in today, you will get my 5 most powerful candlesticks as soon as all of that is connected. So again, good to be back. I got a bunch of emails and inquiries about would I be resuming swing trading today. Thank you for the inquiries. I'm happy to be back. And please leave a comment, follow me, and enter your email address on the website. And you make sure that you get these every time I produce a piece of commentary, whether it be swing trading today or another piece of analysis that I put out. All right, so what we're going to go over today, first off, are the pre-market activity of the futures. Then we're going to segue over into some analysis on Facebook and what's going on over there. Because yet again, management has stepped in it. They don't even know it yet, but they've stepped in it in terms of banning Zero Hedge from their platform. And they are drawing the ire of not only conservatives, but more vocally, believe it or not, from a big liberal. And I'll talk to you about that in a moment. And we'll also talk about some watch stocks that I discussed over the weekend. We'll follow up with them and see how they're performing so far this week. And I'll give you my thoughts on those charts. So let's kick things off with the US dollar, which is probably the most interesting chart of the morning to me, in that it is showing some real weakness. Now, last week, the dollar caught a bid on the heels of Mario Draghi's announcement that, big shock, the ECB would remain dovish. You saw a breakout of this bull flag setup, and the shorts won a covering. Now, the problem here for the dollar is that we are now retesting the breakout point. We retested it once overnight. Now we are retesting it yet again, and we are down below it. This 4-hour bar will close out within the next 3 minutes. We'll check out and see how the dollar closes out this bar in the next several minutes before we end this commentary. Now, if we close down below the support level, you can expect that we're coming down here to 96.74 on the Dixie. So we're seeing a weak US dollar. So what do we want to look at when we see a weak US dollar? We want to take a look at our commodity plays, which have treated us really well thus far in 2019. First off, let's take a look at gold, which is rallying this morning. We saw some weakness last week. We bottomed out. Now what we're looking for here on gold is a higher low, and of course a breakout and a recapture of the 1300 level. And even more important to me than the 1300 level is the 1310 level on gold, which we gave up back here on the 1st of March, and that was a critical support level. I'm going to want to see that recaptured. Now, taking a look at silver, it is also putting in higher lows now on a 4-hour chart. These will all be 4-hour charts. We have a breakout this morning. So silver looking very interesting. Taking a look at oil, we use the Brent price. Oil on a daily basis had a really good day yesterday. It had broken out. What we're looking for now is perhaps a retest of the breakout point, which we have in a 4-hour bar. And we're looking for a continuation move higher on crude oil. Taking a look at Bitcoin, which we now own. Believe it or not, we now own Bitcoin. We bought it a couple of weeks ago on a breakout, and now we're looking for a continuation move higher. You're seeing a bit of resistance at the, let's round it up, the 4,000 level. But the price action here has really firmed up dramatically on Bitcoin. So here's our 4,000 level up here. Stiff resistance at the 38.97 level, which marks the upper band of the consolidation range that we find ourselves in right now. We have RSI, which is flashing a higher low and a double bottom setup. Here's your W, and we are now breaking out. I think we're breaking out probably this week on Bitcoin, and we'll head up to 4,000. We'll see whether or not we close above that level. Let's talk about the stock market futures. We booked profits in our short of the Russell 2000 yesterday using the TZA. We'll take a look at that chart right now. You can see that we had broken out back here on the 4th, pulled back, did a retest, and it was off to the races. And we booked about a 10% profit on this one in only a few trading days. So nice trade. Congrats to members who joined in. But I don't want to fight this market right now because the market on a weekly basis remains in an uptrend. So if we're going to trade counter to the overall direction of the market, I want to book those profits quickly and make them real. Taking a look at the S&P futures, we are up this morning 0.2% or 5.5 points. And here's what we're looking at. Was yesterday an anomaly, a short squeeze after a pretty brutal week last week, or was it something for real? You had economic data that came out yesterday, which was not good. You had the Atlanta Federal Reserve reduce GDP growth, at least their forecast, I should say. So the question is, do we break out above this upper band of resistance and continue on through last week's highs, or do we stall out and then begin to break down below recent lows? And I think that if we break down below the 2,778 level on the S&P 500, we'll be looking to the short side yet again because we will have put in a lower high, and we would then be at the precipice of putting in new lower lows, and that's not what you want to see if you're a bull in this market. The NASDAQ, it looks as though we're setting up here for a continuation move higher. We do have a new weekly high. The question right now that I have is, do we hold these gains, or was yesterday an anomaly? Now, as promised, let's go back to that 4-hour chart of the US dollar. And you can see, yeah, we closed down below support here on a 4-hour basis. Now what I'm looking for here is a continuation move lower on this new 4-hour bar. And that sets the stage for a retest of this low. So as it stands right now, it appears as though it should be a fairly decent day for commodities, assuming that the dollar continues to put in lower highs and lower lows. All right, let's segue over now into our focus stocks this morning. Let's kick things off with a conversation with regards to Facebook. I have been bearish on Facebook since March of 2018. You can go back to check out my analysis on either the website. You could type in the search bar on the blog, Facebook, FB. It should bring up some of my commentaries. And as recently as November, I was talking about Facebook quite bearishly. That's when the British government seized documents from Facebook. I said back then, if the shares rally, that means that short term anyway, the bad news is priced into Facebook. The shares have rallied. We'll go to that chart in a moment. But yesterday, Facebook bans Zero Hedge, which is a news and blog aggregator with definitely a conservative bend, no doubt about it, but hardly anything that in this overly sensitive world we find ourselves in with the social justice warriors, nothing that is hateful or hate speech. I hate that term. But they banned one of the topmost traffic websites out there from their platform. And this comes on the heels of Elizabeth Warren, who is no conservative, demanding the breakup of tech companies like Amazon, Google, and of course, Facebook. And Facebook, this Mark Zuckerberg is just inviting a Department of Justice probe into unfair trade practices, especially with their acquisition of some very strategic companies and their ability moving forward to acquire these companies like Snapchat, Instagram at ease. Those days may be numbered. Let's get to the charts. Okay, so weekly chart of Facebook. The last I spoke about it was back in November, I believe. And I said back then, if we rallied on the heels of the news out of Britain, in all probability that the bad news was priced into Facebook, and sure enough, we have rallied and rallied strong. Now, I'm looking to short Facebook. I'm not looking to buy it. I'm looking to short it. Would I short it now? Well, I'll tell you, looking at the candlestick action here, this is not exciting. We are at resistance. We are flirting with a breakout. Let's throw up a line here. Here you can see it. We were rejected yesterday, but the week is still early. We may break out here. And if we do break out here, would I be a buyer? No. To me, these shares are uninvestable because I'm fairly confident, as sure as God made green little apples, one day you're going to wake up and the headline is going to read, FTC opens probe into Facebook for unfair trade practices. If we do, in fact, rally up and through and close above this resistance level, I think we're coming all the way up here to the 185 level, which marks the prior lower band of support on Facebook. That prior support level will then act as resistance. Now, taking a look at Stokes and RSI hooking up, breaking out, same deal with Stokes. So I wouldn't be the least bit surprised to see a breakout this week and a move higher. So the path of least resistance remains higher in the short term anyway for Facebook. Longer term, I think these shares have a lot of trouble ahead of them. Stocks that we were talking about over the weekend as focus stocks, Shopify, weekly chart, I was bullish on it. We do have a continuation breakout this week. We're already up 5.6% this week. We need to take a look at a daily chart right now. We did break out yesterday. We need to see a pullback. I won't chase these shares. We are at all-time highs. I think that there is more fuel left in the tank here to press higher. I'm very bullish, but I need to see a pullback on these shares before I went and opened up a long position. Members, stay tuned for an alert. Google, which I had been bearish on going back to the spring, and rightly so. We had a major sell-off. We are breaking out now on a weekly basis. While I do have my FTC concerns with Google, I don't think there is in your face with regard to their behavior, as is Facebook. Nonetheless, the risk exists here that you do get some FTC intervention into Google because they are one powerful company. So far this week, we have broken out above last week's highs. The path of least resistance remains higher for Google. Daily chart, we broke out yesterday. I'm looking for a retest here, and we'll be looking to open up a long trade on the shares of Google as a swing trade. Next chart up, Kimco Realty, weekly chart. We were bullish on it. We remain bullish on it. We're looking for a breakout here on a weekly basis. So far this week, we have a bullish key reversal. So it's going the direction that we'd like. Daily chart. We have a bull flag set up, a bullish key reversal. I was worried about the Stokes over the weekend because they were rolling over. they're now beginning to hook up. So while I'm still a bit concerned about them, I'm a bit less concerned about them than what I was on Sunday. I do want to see these stocks continue to rise. I want to see momentum gain, and I do want to see a breakout. Members, more to come on Kimco as a potential long. Shares that I was looking at as a potential short and a potential long. I'm talking out of both sides of my mouth today, but it's the truth. SINA. They had a horrible week last week. In fact, they retested not one support level, but two. The question for me over the weekend was this a retest? We need to keep an open mind because the shares may be a buy if they successfully hold these support levels. But if they close down below these key support levels, look out below for the shares of SINA. If I want to go shorting individual stocks, I want to go shorting stocks that are breaking down below or threatening to break down below their December lows. SINA, BIDU, which I'll go to in a moment, they are underperforming the S&P 500 and the NASDAQ by a mile. So I want to go shorting laggards, not leaders. Daily chart SINA, I think we have a counter trend rally here. We broke down last week below critical support, which began back in December. Volume yesterday was good, so there's more fuel in the tank to the upside here. But as it stands right now, I would not be a buyer, and I would be looking to short the shares of SINA. That may change soon, depending upon how we close out the week and how we behave in subsequent weeks, assuming that the shares begin to show some relative strength. BIDU, weekly chart. Another stock I spoke about over the weekend as a potential short because we broke down below the lower band of the rising uptrend channel on a weekly basis. We have rallied so far this week, but is this rally simply a retest and an attempt to try to recapture prior support? We won't know for the next couple of days. Now, taking a look at Stokes on a weekly basis, it appears as though, at least after one trading day, with 4 trading days left to go, we're putting in higher lows, which is bullish. Same deal here on RSI. We need to see that continue. We need to see a recapture of prior support. We'll be watching this. AutoNation, another one where over the weekend it appeared as though we were either A, putting in a double bottom retest or the beginning of a W formation, not a beginning, I should say a completion of a W formation. We do have a higher low, but when these shares become a short is if we take out the December lows. If they hold the support level and they begin to show some strength, they begin to break out, well, then the shares could quite possibly become a long. So this is what I mean about I'm talking out the both sides of my mouth, but I don't make the market. The market sends us signals. So either A, we take out the December lows, or B, we consolidate and we begin to break out to new highs. I'm just watching what the market tells me is the current path of least resistance. That is it for this morning, folks. Be sure to check out the new website. Enter your email address. Follow me here on YouTube. Leave a comment below. I'll talk to everybody soon. Be well.